But along with that, let me also welcome Mr. Amitendu Palit, who is joining us on the show right now. And very good morning, and thank you so much for your time. And firstly, when it comes to the new tariff announcements, the deadline has been shifted to 7th of August, wherein the rates have been adjusted for select countries, but India, that remains to be the key concern, with 25% of tariff has been announced. Definitely, the markets were hopeful that there could be a taco trade in between, but doesn't seem like as of now, though Donald Trump does say that the negotiations are still underway. What's your first take on the new rates that are being announced, and specifically for which economies this is turning out to be big?
Firstly, thank you so much for inviting me back on the show. It's a pleasure to be with you again. I think in all this madness around tariffs that we are seeing getting unfolded around us, India somehow seems to have lost a bit of the momentum that it had earlier. Because if we go back and see the timeline, India began negotiating a bilateral trade deal with the United States from as early as in February. This was well before the reciprocal tariffs were announced. This was mentioned in the first joint meeting that Prime Minister Modi had with President Trump in his second term in office. So India was actually earlier of the block. The negotiations were proceeding well. And I think one also has to look at the fact that earlier during Trump 1.0, India and the US had come very close to finishing a trade agreement, which didn't happen for whatever reasons. But I think as the negotiations proceeded, certain factors came in which complicated the matters. Now, today, if we look at Asia at large, I think you can distinguish into two kinds of groups from a US perspective. First are those countries with which the United States have been able to work out a tariff agreement. And these are essentially covering those countries which depend on the US market very significantly. So, for example, one of the earliest ones was a country like Vietnam, which got away with a tariff of 20%. Then came Indonesia, 19%. Subsequently, we have had Thailand, Philippines, Japan, Korea, all beginning to agree to the American demands for market access and getting their specific tariff rates. There are only two countries in Asia with which the United States continues to stay engaged in negotiations, and for none of which they're actually getting what they want. The first of these is, of course, China, and the second is India. So today, I think we need to look at these two economies separately from the rest of the economies in Asia to look at how the US tariff action is panning out with respect to them. So honestly, I am not surprised at India having got a rate of 25%, nor am I surprised that other countries in South Asia and around India, which earlier had reciprocal rates higher than what was announced for India, have eventually been able to bring them down to below India's rates, because obviously most of these countries are not in a position to really negotiate that hard with the United States. Their negotiating leverage is also limited, unlike first China and then to some extent for India.
Right, Mr. Palit, just wanted to take that point ahead with you. And I was just thinking about what you were saying in terms of our Asian peers. The tariffs for most of them have been reduced from the earlier Liberation Day tariffs. But let's talk about our immediate neighbors. Let's talk about Pakistan, Bangladesh. Let's see Sri Lanka, the kind of cuts that they've got compared to their original tariff. What would you say the impact could be on an economy like ours? And would that make our goods less competitive in terms of tradability, if at all?
Look, I think I'll put it this way. The trade with the United States is an important trade for India, and as far as manufacturing is concerned. But I think I would like to separate it into two parts. Whatever we are getting to see, the tariffs, the entire controversy surrounding tariffs is actually impacting the goods trade that India has with the United States, and for that matter, all countries that have with the United States. There's a very large segment of trade that India has with the US, which is in services. Now, that part of the trade doesn't get affected till now by whatever decisions have been announced on tariffs, number one. Number two, with respect to relative competitiveness, yes, in some respects, India's exports to the United States will definitely be impacted if the current tariffs, as announced on all countries, remain. But I want to bring up one point here, that if we look very specifically at some of the sectors which are of India's big export interest in the US. So, for example, a sector like pharmaceuticals. Pharmaceuticals are yet to come under these tariffs, though on quite a few occasions in recent months, President Trump has said that pharma prices have to come down if they want to avoid the tariffs. The second point is that the United States is going to bring in a particular understanding on transshipment and the tariffs. Now, what that means is that I don't oversee the possibility of various countries and supply chain managers looking at how the rules of origin can shape with respect to their exports to the US, which country is getting what kind of tariffs. And let's not forget that a lot of these supply chain managers are actually located in the United States. If you look at big sources like Walmart and Amazon, for example, they're sourcing heavily from Asia. Now, for them, it is always important to economize the costs to the extent possible. If the transshipment issue comes into play, then that is going to have a very complicated kind of impact. Now, in that complication, whether Indian exports will be a loser or a gainer is something which is not yet very clear. But there could be sectors like, for example, gems and jewelry, or some segments of textiles and garments which might get a hit. There's another sector which we need to watch out for closely, that is refined petroleum products. The problem over here is that the US is beginning to come very hard on India as far as sourcing of crude oil from Russia is concerned. So India is separately under the scanner. But this apart, I don't really think India will be very seriously affected, because what India has done, and I think that was something for which Indian policymakers deserve praise, is that India has actually diversified. So if you look at free trade agreements like the one that India has conducted with the United Kingdom and the ones it is engaged with the European Union, India will definitely have the possibility of diversifying its exports to some extent from the American market. And let's not lose sight of the fact that the services trade actually remains unaffected.
Right, very interesting points over there, Mr. Palit. Yes, of course, healthcare remains to be one of the key focus areas for President Trump. But the other big focus area is actually the energy basket, and specifically oil. Like even you were mentioning that, yes, because we do import oil from Russia, Donald Trump is thinking about penalties on Indian markets. But along with that, help us understand two aspects of it. Firstly, the sanctions that he's talking about with respect to the countries that are related to Russia for now in terms of this sector. With respect to that, how is oil expected to react in the international market? And secondly, because India is facing such issues, do you believe maybe it will be a rational move to make adjustments to our trade policies over there?
On your first question, I think the oil markets, very interestingly, I think the oil markets are beginning to absorb a lot of volatility that otherwise would have impacted them coming out from these announcements. I think essentially aligning to a set of circumstances where they realize that over the next 2 to 3 years, whether it be because of the Trump policies, whether it be because of the otherwise uncertainties prevailing in the Middle East in terms of Israel, Iraq, Gaza, and so on and so forth, the oil market is expected to be volatile. And that is a volatility which they will have to factor in. They will look forward to the OPEC's decisions in this regard, but they are also going to watch out very keenly for where the big buyers of global oil, countries like China and India, which till now continue to remain among the biggest performers as far as the major economies of the world is concerned. India, in fact, is the highest at 6.2%. So how they organize their oil purchases are going to be very important, but I think they also have sufficient confidence in the ability of the oil market and the ability of these two countries to diversify their positions. But that brings me to the second question. I think with respect to India, there are two factors over here. There are two specific countries which are beginning to cause concern for the US. The first is Iran. We have already seen some sanctions related to Iran coming for Indian chemical companies. 5 or 6 of them have been organized. On the other side, the Russian oil purchase issue is beginning to hit India in two respects. The first is, of course, the sanctions that the European Union has announced. The second is this Trump idea of secondary tariffs on those countries which are big pickers of Russian oil. Now, my point over here is that if, as it is, there is a comparative disadvantage for Indian exports into the United States because of a 5 to 7% tariff difference between the competitors, what difference does another 15% make? A difference will be a difference. So I don't really think that India should, at any stage in this regard, compromise on its decision to source the crude oil that it is sourcing, depending upon what it thinks is the best economic option for it. And that continues to remain the bottom line as far as India's energy basket is concerned.
Okay, Mr. Palit, thank you so much for such wonderful insights and for your time as well this morning. On that note, we'll let you go. Thanks once again.
My pleasure. Thank you for inviting me.
Thank you. Let's